The four-step method to high-performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high-performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about one of the most powerful signals that traders can use. And before we get started, I want to talk about the playbook. 2022, I am constantly updating the playbook notes and course with current examples from 2025. All the PDFs are in the front section, and the updates are right underneath of that. So all the signal days that we go over in the playbook, 3 days of breakout traders in the markets, first red days, first green days, the inside days, day zero templates, all targeting parabolic trades. Nothing changes. 2022, 2025, the same process applies every single week for me. And I want to emphasize to traders the importance of simplicity and reproducibility. Getting away from minutia and chasing markets and focusing on mastering the process and high probability trading setups. So today we're talking about inside day, the signal day. And one of the things I want to demonstrate to traders, this is just the daily list of instruments that gave signal days this week alone for the inside day. Now, most traders don't stick to a plan or a routine. They engage in random impulsive trading. They focus on one market, which there's nothing wrong with. I'll repeat this over and over again in every single video. Whatever you're doing, if it's making you money, keep doing it. If you're struggling, if you're inconsistent, if you engage in random, impulsive, self-sabotaging, degenerative gambling type of behavior and you blow up trading accounts and you can't stick to a routine, listen to this statement very, very carefully. The markets do the same things every single week. They have done so since the beginning of time. The trader is the reckless variable train wreck. Now, we've talked about this over and over and over again. Markets only do three things. They only do three things. Every market's the same. I don't care if it's futures, crypto, indexes, metals, energies, currencies. Every market's the same. Stocks, you name it, they all do the same thing. They break out, they pull back, and they continue to trend in either direction. They break out, they fail, and reverse. Or they stay in a larger trading range. Now here's the thing. Traders think that it's all about learning more about the markets. The markets only do three things. Traders are jumping all over the place, chasing stuff, trying to trade every move and zig and zag in a market, or they're a rock in a sea of chaos, hunting the same money-making setups over and over and over again. Now, I read a comment yesterday where a trader said, well, I've studied markets for years, and this is BS. Well, here's the question. You've been following markets for years. What does that mean? I always ask that question. What does that mean? What does that mean? You've been trading for years. Are you making money? Are you making money, or you know a lot about the markets, but you're still not making money? See, the trader's the problem. Traders do all kinds of crazy things. They can't sit on their hands. They don't have a real edge. They're just going there to trade. They want to catch the high, catch the low, catch the trend, catch the reversal, catch this, catch that. But what's the rinse and repeat setup? The actual rinse and repeat setup. They overtrade. They get emotional. They trade on days that there's no edge. They're trading a market on a day with no edge to catch a move because they're addicted to trying to get a trade. I got to make money today. They engage in irrational behavior when they get behind the keyboard. I'll keep saying this over and over again. They sabotage all their results. They're the number one reason why they fail. They think it's the market. They don't see in the mirror that they are the problem. The trader is the variable. Behavior of the trader is the number one reason most traders fail. Again, I challenge any guru out there to prove this wrong. Markets only do three things. Whether it's an algorithm, whether it's big players, whether it's one individual moving a market, they all do the same things. Keep it simple means, what is your edge? Maybe you trade one or two setups. The playbook focuses essentially on the main signal days, the higher time frame signal days. We've gone over this in the higher time frame videos. Everything comes from the daily charts. These are signals that the higher time frames give us. When breakout traders are in the markets, I talk about my friend Steven a lot. My friend Steven only trades reversals after markets break out and not until the third hour. We talk about first red day. We're targeting markets that are giving us signals that they're potentially about to go on a strong unidirectional move. And if we're targeting daily ranges, the idea behind that is asymmetrical risk reward. 1R for 5R, 1R for 10R on large range monkey hammer templates. But today we're going to talk about the inside day. Why I love the inside day is because how do you argue about an inside day signal? It's inside of the previous day's high-low range. Essentially, the inside day signal boils down to two types of main setups: reversals, trap and shift, and they explode quickly. When traders get trapped on the wrong side, the market will reverse quickly and not allow them to be in profit. It's a signal day that brings an instrument up on our watch list regardless of the session that you're trading. Build your muscle memory, because the templates show us the setups. The higher time frame signals show us the setups. There are multiple opportunities. Now, I keep repeating the importance of understanding 2 to 3 scalable opportunities a week with 90-10 setups are all you need to significantly compound your trading account. Getting away from the idea of constantly trying to trade all day and trade moves, trade this, trade the lunch time, the afternoon time, the soup time, all these things, and focus on rinse and repeat 90-10 parabolic trading setups. Learn to scale them up in size. Master the live execution. Number one, you need to master the daily process of building your watch list. Now, the importance of building your watch list is so that you can shortlist high probability candidates. And then once you've shortlisted your high probability candidates, you can filter through to see which ones are actually setting up into your session, which shortlists them even more. We're going to walk through an example of that in this video. So it's not about having 20 charts open. We're looking at 3 or 4 90-10 high probability candidates and then picking 1 or 2 in the session that you're trading into the timing window, keeping them on your screen, and then understanding how to execute that trade setup. And we keep it simple: entry, stop loss, take profit. No matter what you do, if it's not really simple, you're going to have a great week. You're going to get into a market that just, even if you didn't know what you were doing, you would make money on it. And then the next week, you're going to engage in other trades, other impulsive random activity. You're going to do damage, and then you're going to get frustrated, emotional, angry, bitter, all those things. And you'll go back and start all over again. You'll repeat the same win-lose cycle. But if you keep it simple and focus on the same winning setups, it gets easier and easier to, number one, stop chasing garbage. Number two, focus on rinse and repeat, because you can flip through a chart and go, nope, 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 and stay away from guessing. Stay away from hope trading. It's about building your trading business, growing your trading account on the same easy money making setups. What happens is that traders learn all this other stuff, or they see all these other things, or they see that traders are taking trades all over the place and they're, I didn't get a trade today, I didn't get a trade today. Instead of understanding that I didn't get my setup today, my edge didn't present. Why would you want to trade if your edge hasn't presented? If you don't have a 90-10 edge, why would you want to just go and try and trade a market? regardless if you win or lose. I always joke that's getting rewarded for bad behavior. Where is the setup that you can't lose on and doing nothing else in between? We have nail and bail opportunities, and we have all-in 5-star monkey hammer ACB trade setups where we can scale in heavily. And it's going to the close of the day. It's not coming back. It's about playing to win, not guessing. It's a very simple model. It's not about the markets. It's about mastering yourself. And until you master yourself and your understanding of your edge, you'll continue to reproduce 50-50 results. Playing to win means 90-10. 90-10 easy money making setups, and 90-10 the trader sticking to the plan and not doing other random, impulsive, degenerate behavior type of things at the screen when they get behind the keyboard. So if your setup presents, you execute the trade. If it doesn't present, do nothing at all. Build your watch list for the following day again, and then shortlist back to the best candidates. Very simple, rinse and repeat. Focusing on 90-10. Why most traders lose? They don't stick to the plan. They think it's the markets. They don't focus on their own behavior and sticking to rinse and repeat easy money making setups. So here's the watch list that was built each day just for the inside day signal. Now Friday gave several inside day signals for Monday's opportunities. Now here's the thing, you don't have to follow all of those markets. These are currencies, energies, metals, indexes, and cryptos. If you have a basket of your highest probability opportunities, so some traders are trading Asia. Well, we have New Zealand cross pairs. Some traders are trading London. We have Europe cross pairs, Euro, Pound cross pairs. Some traders are trading New York. They may have time to just have a quick skim through these pairs to see which ones are setting up into the New York session. We had metals. We had a couple of indexes, the Dow, NASDAQ, the S&P. Monday gave one signal day. Now, one of the ways I shortlist candidates right away is if I get a signal day on Friday, I get an inside day on Friday, the first thing I'm going to look for is an instrument that has broken a weekly level. So, for example, we have an inside day signal. If it hasn't broken any levels on the Monday when I come to my New York session, I'm not trading that instrument. I'm looking for the false break reversal. So I want to see an instrument on Monday, day one, for the reversal setup. If it breaks out, we could have a Monday opening range day one runner. And I'm not going to counter trend a day one runner. If it's already left the station, it's not my setup. So for me to shortlist a candidate, I'm looking for one of these inside day signals to have broken a weekly level. If it hasn't broken a weekly level, that means I'm still inside of the previous week's range. The highest probability candidates will have potentially already broken out and failed, and now I'm looking for the low-hanging fruit parabolic opportunity in the New York session. Page 96 in the playbook. What that means is I want to see the market already have broken out and failed, but it hasn't gone on its run, the range. Remember we talked about daily ranges. If it's an inside day false break reversal, we're targeting the other side of the range or a daily range. That's the low-hanging fruit. Market breaks out and fails, and now it's sitting there trapping traders in a market that's not moving until the third session. Page 37, 3-session setup, targeting a daily range. Simple rinse and repeat. Signal day, now we're going to shortlist it by looking for the highest probability candidates. We're only looking for 2 or 3 to be on that short list. Now for me, New York session, indexes, metals, and maybe a major currency pair, or one of the cross rate pairs that has the volatility or the history of showing me that behavior where I get the false break reversal in the New York session. Now for me, I can run through this basket of instrument pretty quick because visually over 25 years, I've built my muscle memory through experience. Now for traders who are just learning, The most important thing is to just keep a small basket. Some major currency pairs, some indexes, some metals. Keep it simple. Look at one of the metals, for example, silver. We can look at silver. This is a 30-minute chart. The high of the year was just outside of that inside day range. This is silver's chart. We'll look at Friday. Friday gave the inside day signal day. Traders in Asia had the opportunity for the reversal setup. Now, this is a 30-minute chart. For the simplicity of this video, we're going to just try to walk through the week. This market broke out and reversed heading into the 8 p.m. Asian window. Now, recognize again, you're going to need to go and study. If this is new to you, build your muscle memory. Remember what I said, a false break reverses quickly because they're not going to allow traders to hold on to any profits when they're in the wrong direction. It's going to reverse. Now think about the rationale though, in simple terms. Monday, the opening range triggers new breakout traders at the beginning of a new week on the wrong side of the market at the high of week level. The high of week level, we just scroll back, we can see that's the high of week level from the previous week. We'll just draw a horizontal line here to show traders. We broke out, we've triggered new breakouts, the high of week, and the reversal begins. In Asia, continues in London. If traders had stops on the other side of the market of that inside day, they've been stopped out on the higher time frames. If traders are holding on to this, their loss is getting even bigger. It blows off parabolically just prior to our New York open session. The New York market opens, and at 9:30 New York explodes back inside of the range. A reversal opportunity in the New York session for a nail and bail reversal. We're on Monday, day one. They've broken out. We now have an outside day. An outside day. A large range day on Monday, day one, giving us an outside day close. But it's a reversal nail and bail on Monday, day one from the inside day signal. One and done, lock in the money, get off the screen. That's how the trade goes. There's our signal day. We have a high probability candidate. Traders in Asia got the reversal. Traders in New York got the reversal. In this particular situation, we had a large range outside day. That's not always the case, but traders in Asia and New York were able to benefit from the higher time frame signal day. One and done, lock in the money, come back, build your watch list at the end of the day or the next morning, and get on with your day. Now, Monday, we only had one instrument give us a signal day, and that was the Euro-Swiss cross-rate currency pair. So Monday gave an inside day. Again, this is a 30-minute chart. For the purposes of this video, I just want to emphasize to traders, the chart time has zero to do with anything. But for me to be able to see the template's really easy. I use 30-minute charts. But you can execute a trade on a 30-minute chart. Now, depending on the instrument, you may not, because the volatility, obviously, we're looking to finesse the best entries that we can on the smallest time frame based on the daily time frame signals for a 90-10 high probability trade setup opportunity. Now, let's look at this again. Monday is our signal day. We got an inside day. It brings this instrument up on our watch list. It's the only one that came up as an inside day signal. So obviously we shortlist this, but how does price behave? You heard me mention that this market broke out earlier in the session. I'm trading New York. It broke out and reversed immediately, which again reinforces what a false break reversal is. It rejects quickly because it doesn't allow traders to stay in profits if they're in the wrong direction. It breaks out, it coils sideways. How does it set up into the New York timing window? So heading into the New York timing window, there's a couple visual things you can identify with right away. We have volume up high. What does that mean? There's a neckline. If that collapses, if price breaks down, guess what? It's a free fall back to where the low of the day level is. Just little visual clues of what a best trade template looks like. We already have our false break reversal from the high of week level breaking out, which traders ask all the time, what is a peak formation? Peak formations are formed in sessions and the following day become daily extremes, which give us our high of day and low of day levels. Remember, we're targeting a daily range. If I'm targeting a daily range and I want to sell high, I want to be selling up at the top of the box. Price is always in a box. What's the box? The previous day's range. Now, page 29 in the playbook, we talk about the basic model for trade entry criteria, page 29, because it's simple. The whole point of simplicity is it's reproducible. If it's reproducible, you can do it over and over and over again. If it's not, you have gobbledygook. You have analysis paralysis. You have mixed results because nothing can be done simply, reproducibly every single day. It's simple. Basic model means exactly that. A basic rinse and repeat simple model. We have our signal. We have our setup. Remember, there are only two setups, pump, coil, and dump. I can draw that. That's really simple. Or dump, coil, and pump. The other variation of that is the V bottom or the A top, which is the exact same thing, which is trap and shift. Trap traders on the wrong side and then shift the market. Shift the money from the many to the few. So basic model for trade entry criteria. And then we have our simple process of entry, stop loss, and a take profit. Now, the other thing I want to emphasize with this particular instrument, the range is irrelevant. It's about the probability of the setup. This could be any instrument. This could be the Dow. This could be the pound yen. This could be gold. The instrument is irrelevant. It's the setup, the probability of the setup, and then the simple rinse and repeat process. We had a signal day, higher time frame signal. The market set up with one of either two templates, pump, coil, and dump, or dump, coil, and pump. We have the pump and dump template. We have our timing window. We have our simple model for trade entry criteria met. We have an entry, a stop loss, and a take profit level. Lock in the money, walk away, get on with your day. Come back later, build your watch list, and shortlist your candidates. Tuesday gave us multiple signals, not as many as the previous Friday. 11 signals from Monday's close of inside days. We can look at natural gas. We can look at an index. We can look at a metal to see which ones are setting up the best in the session that we're trading. Remember what I just said. The ideal ones I want to see are markets that have broken a weekly level or that have already broken a weekly level. So think if Monday's our opening range and it breaks out, closes and breakout, we may have an inside day now that can offer us a trap on the wrong side at a weekly extreme for the explosive reversal opportunity. Natural gas broke out on Monday and made a lower low before pumping back up. Tuesday closed as the inside day, giving us our signal day. So it's broken out on Monday and reversed, giving us a lower low, lower weekly level, and then breaking down, giving us our inside day signal day. But what was fantastic about this particular opportunity is that it broke out earlier in the day. It broke out earlier in the day, breaking down. Now we have a breakout, comparing that to the other false breaks that we saw earlier. This breakout has succeeded. It's still in breakout, heading into our New York session. Now, one of the most important things I want to just keep repeating to traders is simplicity. We have a market that has broken out. We just talked about markets only doing three things. This breakout has not failed. So we have a couple of scenarios. This market could break down and fail in reverse, or it can break down and continue, but it's day three. Day three, two types of trades that we look for on day three, reversals or trend trades. If you're not sure what I'm referring to, go back to the playlist and watch other videos. If we're in a day three range expansion, that market could be projecting a 100% expansion of the range as a potential profit target. Now let's just go back, before we go back to the 5-minute chart, I want to identify some things to traders. If you are just learning, I've talked about using demo or using the smallest lot size possible until you master the process, master your behavior, your emotions, your executional skills, everything. and focusing on the simple process, even if it's on a higher time frame. I got traders who are learning and they're trading on a 1 minute chart and they don't know what they're doing. Start with the higher time frame. And then once you've mastered that, the 1 minute chart is once you have your thesis in place and you understand the timings and the levels. It's all about the levels. We've broken down and made a lower low again. That's the new low of the week in the new week. Monday, Tuesday, opening range, initial bounce, signal day, higher time frame, daily signal. Now we have a setup. We have a market that's broken out, pulled back, and potentially now going to continue on a range expansion on Wednesday, the midpoint range of the week. So if you're just learning, this is an excellent way to learn with the smallest lot size possible using the higher time frame. Same thesis, we have our engulfments and our take profit level. Everything has to be simple, reproducible, and scalable. We're not going to get into scalability here. We're just talking about simple rinse and repeat, entry, stop loss, a break-even level. You can walk away from this trade. As I've told traders regarding the ACB Masterclass with my sons, the ACB templates are designed for them to walk away, zero management, zero stress, zero thinking, zero emotion, to remove themselves out of the equation. They're looking for one setup every single week. That's it. One signal and then one instrument that sets up meeting the criteria. And then walking away, letting the trade play out. There's nothing to do except mess the trade up. If traders are trailing too hard and everything else, they get stopped out. They don't get the maximum amount out of a winning trade setup. They do self-sabotaging things. There's nothing complicated. It's the trader that complicates everything. And they don't stick to a plan. So the whole idea is building your trading business on the 90-10 setups and doing nothing else in between. If you're doing other things, then your results go from 90-10 towards 50-50 or 30-70 if you're random and impulsive and doing degenerate things and rinsing and repeating that behavior instead of rinse and repeating winning behavior with a winning edge, doing the same setup, same signals over and over and over again. Wednesday gave several signals, not as many as Tuesday, but again, just shortlisting that down to the highest probability templates. Now we're down to 2, 4, 6, 8, 9. You can shoot through that list. Copper's off the list. We had the large explosive move on the threat of 50% tariffs. When we see huge moves like that, I just stay away from those markets until they consolidate and normalize. But targeting one or two of these on the back side of the week. So we talk about front side, back side. Now just for simplicity, we'll look at the Aussie dollar. And again, we talked about Wednesday being a signal day, front side of the week, day 1, day 2, day 3, reset, midpoint range. In the playbook, we've gone over this. Wednesday in the basic model is a signal day. Page 19, we can get day 1, day 2, day 3, signal day, a first red day, and the back side of the week. This is an example of a pump and dump weekly template. Same thing applies on the dump and pump template. We can get day 1, day 2, day 3, signal day, a first green day on the back side of the week. In this particular example, Tuesday's the inside day, and you can see the reversal setup in the US window on a Wednesday giving us our first green day signal. Remember what we just said, higher time frame signals. The Aussie dollar comes up with a signal day. Now just simple understanding. This market breaks out, pulls back, continues to break out into our Europe session. It breaks out and goes higher. That is not a false break reversal. Remember, now we're on the back side of the week. This market has broken out and made higher highs heading into our US session. Higher highs is our setup for the dump, coil, and pump, or the trap and shift. Now this is a 5-minute chart. Just a couple of simple things again to understand. Timings, levels, New York Open, 10 a.m. club, our basic model for trade entry criteria. Again, page 29 in the playbook. Even if you're wrong and you get in early, you're still placing your stop loss at the extreme. But for traders who enter in based on our basic model for trade entry criteria, we have our pin hammer, our entry, our stop loss, and a take profit level. Simple, reproducible, and scalable. Signal day, setup, timings, levels, behavior of price, entry, stop loss, and a take profit level. Inside day, signal day. Now, Thursday gave us two instruments. Again, as I mentioned, copper, we'll look at that briefly just to show after the large explosion on the Trump threat with the 50% tariffs. I don't focus on that instrument until things normalize again. So that leaves us only with the NAS 100. The explosive threat on 50% tariffs, these aren't normal markets. So we're looking for normal rinse and repeat. We're not looking to be scientists and rocket scientists reading every zig and zag in a market trying to catch a move. Traders who traded that false break reversal on Friday, limited profit potential. But again, I'm more interested when these markets get back to normal trading after the explosive move. Of course, after a large move like that, we're going to have inside days. But now, as we head into a new week, we may see some normal activity, and then the inside day signal can have more relevance. But for now, after that large move on the Tuesday, I would leave that market alone. We had our inside day signal on Thursday, heading into free cash Friday. How does price set up on the day? Day 1, day 2, day 3, front side. Wednesdays are reset, our midpoint range. Day 1, day 2, day 3. Friday's the closing range of the week. Let's just go back to opening range initial balance. We had Wednesday break through the high of week level and the high of the previous week, hitting stops on Friday's inside day. So we had inside day signal on Friday. The opening range, we had our new high-low. So I talked about markets that break weekly levels. This is an example of where the NASDAQ had a signal day on Friday, but you'll notice it traded back inside of a previous weekly range. We didn't break any weekly levels. And then we head into the backside of the week. Wednesday's our reset day. Day 1, day 2's an inside day. And that market on the opening in Asia took out Wednesday's low of day level. Now, if we just zoom in for a second, one of the things that I often say to traders is, are they working the high or are they working the low? This market blew off in Asia, took out the low of day level, took out the low of Wednesday, our reset day, the midpoint range of the week, and bounced back inside. And we talk about low bear. So if I put in the extreme, again, we mentioned earlier in the video, peak formations form the daily extreme. So when we head into Monday, guess what? Friday's low of day level made in Asia is the low of day. Now, we're not in the New York session yet. Are they working the high or are they working the low? They trade back down into the low formed in Asia, and we're heading into our New York session timing window. No major red news on the calendar after 9:30 a.m. New York, which is when the New York equity markets open. I post this in the community tab. 9:30 New York markets open, 10 a.m. club goes to work. What that means is after the New York market trades the first 15 minutes, do we have our thesis? Do we have our setup? So we already have an instrument that's come up on our watch list, but traders want to get into the market right away. And we talk about being patient and allowing that template to set up, timings and levels. The explosive 1-minute candle is our open of the market. The market trades back down through that opening minute, back down into our low of day level. Are they working the high or are they working the low? When this market opens, what level are we at? We're not at any level, but it breaks back down. And as we head into the new 15-minute rotation, 9:45 a.m., we have our pin hammer. Now, this is where traders need to build their muscle memory because they're getting into markets right at the open and there's no setup. Now, I'll repeat this. There's a reason why we refer to the 10 a.m. club, because 95% of our opportunities that are high probability are going to come after that 15 minutes of the New York equity markets has traded. That establishes the high and low range in the first 15 minutes. We have our higher time frame template. We have our pin hammer. We have our potential setup. Remember, trap and shift. They've dumped it down into the low of day level. Trap and shift. We have our simple model for trade entry criteria. It's Friday. We're looking for that reversal setup. Entry, stop loss, take profit level. Now, an example of where traders may take a position off, or if there are multiple positions, leave a trailer for the previous swing high level. But it's important to just keep things simple. We have our pin hammer, 9:45 a.m. We're working into the low. That explosive move at the open traps traders on the wrong side that are chasing the impulsive move. Where is the setup? We have our higher time frame signal. We've trapped traders down low. They're going back to the money. The money where they've got traders trapped on the wrong side of the market on that explosive move coming out of the Europe session. Europe traders are in the money. They explode back up. They coil sideways. They get shorts from the Asian window and dump it back down into the close of the week, the closing range of the week. Now, what's amazing is I repeat constantly to traders, what setup are you hunting? Several instruments gave signals. And as I mentioned, 2 to 3 scalable opportunities in a week is all you need to significantly compound your trading account. Building your muscle memory on the highest quality templates, not just taking any market because it's an inside day. Which one is actually set up? What's the best setup in my session on the day for a 90-10 parabolic trade setup opportunity? Now, this signal day alone significantly offered traders multiple opportunities this week, which is why I keep saying keep things simple. The markets do the same things every week. It's the trader. The trader is the number one reason most traders will fail. Simplicity, reproducibility, and scalability. Master your setups. Master your behavior, your emotions, your daily routine. Build your watch list. Shortlist it to the best candidates on the day. Master the executions of these setups. And then lock in the money and walk away. Don't engage in random impulsive trading. Learn how to scale your trades up in size. Learn to do nothing else in between. Learn not to try and catch moves everywhere that destroy the good results that you do get and can put you into market conditions that can put you on tilt, where you can engage in impulsive, degenerate behavior and blow out your trading account. That's why most traders fail. They can't stick to a plan. They can't manage their own emotions. They can't manage their own behavior behind closed doors. They talk about how they've been trading for years and they know all kinds of stuff about the markets, except that they're a reckless train wreck. They can't become a rock in a sea of chaos. Build your muscle memory, master yourself, and master the markets. Keep everything simple, reproducible, and scalable. And like my good friend Steven says, one kick 10,000 times, not 10,000 kicks all over the place. One kick 10,000 times. Round kick, round kick, round kick. Have a great weekend, traders, and may the markets go with you.